Okay, good morning, everyone, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, July 16th. Good to be with you guys here this morning. I thank you for all your comments and concerns, guys. I am feeling a little better. Sorry, yesterday I was literally losing my voice as the webinar was going on. So we are feeling a little bit better here today, so thank you for that. So, as I'm sure you guys felt in Jamie's webinar yesterday, frustration, the dollar just continues to rip. So 12,008, 12,008, excuse me, that major resistance level that held for well over 2 weeks, the 100% extension, dating off the lows from June, has given out. And the next resistance target is already in view. That's 12,037. It's basically defined by this region here, which is the 764 retracement from the decline off of the yearly high that we made in April. And that comes in line with the former lower median line parallel from the lows that we made in June, just higher here at 1237. So it's been an interesting, couple of days, guys. I just want to say a couple of different remarks. We haven't really gotten any major shifts from the Fed, from the Humphrey Hopkins testimonies. Obviously, they say that they're remaining on course, remain poised to raise rates this year. We won't go into that discussion here again today, guys. You know where we stand on that. I still think it's more likely that we'll see that in 2016. But that being said, here's the dollar with another push higher here. The focus has really been outside the dollar crosses. You saw in the swing update yesterday, even in the scalps, most of the pairs that we've been focused on have really been outside the dollar pairs. The sterling still continues to give us a really clean setup. I mean, the levels have continued to pan out exceptionally well. So we've continued to follow that. Aussie yen will go over Aussie Kiwi. That one from the 8th of last week has continued to break to the upside with no relent. So we'll follow that one as well. And as always, open it up to your questions and trade setups as always. It's slim pickings here. I just want to throw that out there as well, guys. So if you've had a little bit of trouble identifying some opportunities, I don't blame you. It's best to know when the market is not really giving you all that much to take a step back, maybe use this time to make your setups, pan out your analysis, map out your levels so that when we do inevitably get the return of more clear market conditions, we'll have our setups all ready to go. Mark Haberman says, just wanted to say that no questions, market is so unclear. And that's what the comment I was just trying to make as well, Mark. And you can even tell by the questions on the webinars for sure, and that's okay. And that's okay. And that happens for sure. There are times where the market's just not going to give you that clarity. It's important to know where to look and where that clarity exists. And it's important to know when that clarity just isn't there. So there are still some setups, I think, where we do have some opportunities and we do have, the probability still there. And at least we want to know where to shift our attention to. So let's just jump right into the charts right off the bat. Relative performance for the greenback so far in this session. You can see that the dollar is starting against all its major counterparts, save the Aussie, which has a minor advance here of just about 0.14%. Kiwi just getting absolutely slaughtered today, down another 1% on the lows here. So certainly, any calls for that type of reversal or type of rebound there were quickly quieted and quickly dissuaded overnight. Euro down 0.74%, Swissy, and the list goes on. So as far as risk is concerned, here's what the equity market looks like as well. Excuse me. Asia Pac equities all were pretty much higher across the board. Nikkei was up 0.64%. S&P, ASX, this is the Aussie markets, up 0.59%. Europe, as the ECB continues to hold rates as expected, obviously, DAX up 1.65%. CAC 40 up 1.77, FTSE 100, UK market up about a little more than half a percentage point so far. U.S. equity futures ahead of the open also poised to open higher ahead of the session. S&P looks up about 8 handles. So let's jump right into the setups without further delay. Kyle says this week we should have shut down my PC and painted the bathroom. All right. So before we jump into the setups, the dollar index, I think the levels here are pretty clear. I don't think we have any questions on this, guys. If you do, feel free to let me know. One thing I do want to let you know is on the break above 12,008, what we've been following. Again, you didn't see momentum clear 40 still. Okay, and you still have that resistance a little bit higher up, so price still has a little further to go to that 12,037 mark. Again, that matches pretty nicely with the June highs, and momentum still holding 40. We haven't cleaned that 40 range since March. Okay, and that's basically where we put in those highs right ahead of the April open. So just some word of caution there. A break above this high and a push through 40, certainly you're looking for another extended rally. And then you're basically looking for a stretch into like 12,125, which is a very nice confluence region there as well. On the intraday charts, I put this on the radar yesterday. The 30-minute charts here for the dollar index, and those levels hadn't changed either. Okay, just wanted to highlight that we're still holding that 12,008 level even into the open, okay, of the range for the week. So a very compelling, very simple weekly opening range and added further validation. Listen, if you saw a push and a concerted push and close specifically through 12,008, it's all the validation we need for a rally into this 12,037, 12,042 region. Again, those former highs and a 764 retracement. Above that, you're looking at a soft target about 12,071. And again, that confluence region up at 12,125 we just talked about. Keep in mind, week isn't over yet. Heading into tomorrow, we still do get the consumer price index out of the United States. Inflation data always important, okay, especially with what the Fed said. And on the back of the weaker than expected sales data that we got, might be a big number here, specifically if we come off much weaker than expected. One thing on the dollar index you want to take note of here, if you haven't already, we've seen, building ongoing divergence into the highs. I noted this yesterday in the scalp or on the 30-minute here, and it still continues to go. Okay, so we were saying marking some divergence into the highs here with a pending support trigger in view. That's still in play. Okay, we're still making higher highs. The oscillator is still making lower highs, and that support trigger got tested again and is still in view. So a break below this and a pushback below 12,008 actually would be a near-term reversal, or not a real-term reversal, would be a near-term short trigger. Okay, so I still want to put that on the table there. How aggressive you want to play that, or how operative that is ahead of the event risk tomorrow as you head into the CPI figure, that's going to be based on your own risk tolerance, guys. But just to put that out there, keep that in mind. The trigger break would need to accompany a break below 12,008. If that trigger break gives out and this thing is holding 12,008, guys, it means nothing. Okay, just want to make sure that we're putting that out there. Okay, any questions on the dollar index before we move on? Mark says euro, yen, dollar, yen on the 4-hour anyway. Yeah, we'll take a look at those in a sec, Mark. Let me just get through the sterling and some of the ones that we are on the intraday page, and I'll definitely take a look. But I think this will be very telling here today, and specifically, it's interesting to see that signal still has credence and validity here a couple of sessions later. Okay. And I guess before we jump into the intraday page or the intraday update from yesterday, we might as well cover the euro dollar scalp as well. Just a quick update on that as you head into the or post ECB rather, I should say. Here's what the euro looks like. Oops. Sorry about that, guys. All right. So, euro dollar daily. So I put a piece on this yesterday on Daily FX as well. I just wanted to highlight the major key levels ahead of today's event risk, and this basically was the near-term confluence region, which held the basic trendline support that extended off the May low. You also had a 764 or 786, excuse me, retracement, which was the exact swing low from June, basically 109.50, excuse me, and that region of support was basically a last-ditch effort. Okay, if euro push through that, you're basically looking for a free fall for this thing, is what I called it in the video, I think, into this region right here, which is 108.45 into 108.20, 108.18 to be exact, is the actual swing low, or the actual concrete low rather, from May. And then you're looking at a more significant 618 retracement from the advance off of the yearly low. Now that comes in or converges on also a median line for a slope that we've been following from 2010. That gray slope actually extends off the highs that we made there on a closed basis for December. You can see that it caught that swing high almost to the pip here in May and has actually offered some really nice pivots in price. That actually coincides within that region as well here today. So on a continued push lower, that's sort of the initial area of support you'd look to target here on the euro decline. Momentum still has some room to go before it breaks 40. But one other thing I noted in that video, guys, is that despite the decline that you've seen, and despite all the headlines and all this, the momentum signature hasn't really reflected that drop precipitous, turnaround in momentum. It's just not there. Okay, so, calls for 104 parity, it's just, it hasn't materialized yet. I'm not saying that that's not going to happen. I'm just saying from what we're seeing in the now, our area of expertise here in the near term, that's just not here yet. The stage is just not set yet. So near term, this is sort of the focus of support. We need to get back above this same area to even think about getting back on the constructive side for the euro. Here's what it looks like on the near term chart. So the scalp levels have actually been working out pretty well. The risk for the short side was above this region as we came into 109.50, and that was sort of the risk that we highlighted yesterday in that report. Once we broke back below this and we cleared the July low, well, now you're looking at a basic July opening range break. If we just zoom this out, here's your July open. You set a low, you test a high, you come back and test the low, you break the lows, it's the 16th of the month, you're bearish against the highs, you're looking for a late month low. Now, I'm just walking you through a basic opening range, a monthly opening range strategy on a holistic view, and that's how we would play it. It's too early to tell whether or not this is a concrete break of the opening range. We're only, what are we at, 108.88. We're only 20 pips below it. We haven't closed necessarily below it yet, right? So it might be too premature to say that we've actually cleared the opening range, but that would be the implications of closing below that previous July low here today. So major key support and the area that we highlighted there on the daily chart, you're basically looking at that 108. 44, 108.55 will extend it to on the intraday chart from a scalp basis. This is also a 2618 extension off of that high. Nice area of cushion of support there. Just lower. It looks like we're making a turn ahead of it, but that would be the next area of support you'd look for. And again, you really can't get constructive on this unless we were to clear back above that 109.50 region. So on the radar, wasn't necessarily a highlighted scalp yesterday, but I wanted to highlight these levels as we came into the ECB here today. We're obviously not getting as much play on this, with all the Greek debacle. I think you're getting a little bit more of a numbing effect here for the euro, guys, with everything that's happening in Europe. So keep an eye on this. I think this is going to be a sleeper for a while until we finally get some sort of washout on this and then we finally get a recovery, I think, to the upside at some point. So we'll keep it on the radar for now. Haven't really tried anything on this. I actually did get stopped out on a long earlier. There was some divergence earlier ahead of the break below 110 in the week that I tried to take. We got stopped out in the full wattage on that, so I'm not going to try that again. But as it stands right now, bearish buy still remains in play. Every attempt at a rebound in momentum, even guys, head of 60 failure, head of 60 failure, head of 60 failure. Could get a rebound off of that 108.40, 108.50 level, but broadly speaking, looking lower sub 109.50. All right, so those are the two scalps, at least, that were updated on the radar charts. Dollar CAD and Sterling Oz we'll go over in a moment. Those are daily charts of major key resistance that both of those are coming into. Dollar CAD's currently holding that resistance. Sterling Oz is responding to that resistance. But first things first, let's jump into the update from yesterday. So again, British pound, it's continued to respond very well to our levels. We highlighted this yesterday. Oops. This confluence region of resistance, basic trend lines, upper median line parallel for the descending structure, basic trend line support of the ascent, gave you a nice confluence region, 156.70, 156.80, sort of a major area of resistance that we were looking for on the sterling, right around this region. Okay, it's exactly where this thing came into, found some resistance, momentum, came into the former support trigger. Okay, the break of which gave us the downside bias, which spilled into the monthly low. On the way up, there it is as resistance, looking against that region near term. Here's what the scalp look like. We've been following this one since Sunday. So the initial play here was the short off of this region into here. Off of here, you're still kind of looking for a resumption. We were looking for a stretch into 157, which would have been a lot more of a compelling short. So I actually didn't have any plays on this one. There was a compelling short takeoff of this last night with the break of the opening range for Europe, which didn't actually happen until basically an hour ago or 2 hours ago. But basically the risk at this point is for a drop into the median line support that extends off of last week's low. Remember, the validation for the turn would have to be a break below 155.11, okay? And 155.11, again, is actually the weekly open. So here's what it looks like from yesterday's piece. Note also that the momentum signature here is starting to change the behavior. Again, we talked a little bit yesterday about the fact that this thing was continuing to show us some divergence into the highs. That didn't change and inevitably did lead to that little bit of a drop right there into that support. Again, we saw some divergence on the way up, but that rally, okay, right into the open of European trade, failure right at 60. And here's the 40 break in momentum. Okay, it's the first time we saw a 60 break 40 or a 60 hold, 40 break in momentum this week. So again, a change in behavior here, at least the beginning of which could be a little bit of a turnaround here for the pound. So we'll look, let's see if we can get a tag off that trendline support. Again, we'll be looking for possible long triggers near 155.11 or against 155.11. But near term, risk is still to the downside here for the pound. Any questions on that setup from last night? Oh, okay, here Eileen with a question says, I did successfully get that sterling dollar break this morning, but general question, when you get a chance, how would you handle a trade taken UK time 8 a.m., very good entry, but by 9:30 a.m. when normal UK data releases, would you pull the trade off before the data so not to risk the swing, or if a few pips in favor, take the risk of the data? Data risk during US time seems more volatile and a different question. I'm experimenting with different times to trade. Great question, Eileen. I feel like that's a very common question actually for guys who are trading during that time period on whether they should reduce their exposure, close the trade during because of data prints. I'm so torn on how to answer that for you specifically, Eileen, because I don't want to mess you up. This is what I would say, guys. For me, all I can tell you is what I do personally, Eileen. If I'm in a position, first of all, I know ahead of time what that data print is, and I know ahead of time if that data print is important enough that I want to be in a position or it would stop me from taking a position altogether. So I already know going into the position whether I'm going to be wanting to be flat or not ahead of that, just to put that out there. Um, but if I'm concerned about that release, I will take something off the table. If I'm in the money, maybe reduce my position a little bit, reduce the position side and reduce the position size and bring the stop to break even. If you're only a couple pips in the money, bringing your stop to break even is basically closing the trade, right? Because you're going to get some volatility, you're going to get stopped at break even, and that's not doing anybody any good. That's just basically washing you out of the position, and that's what the market does. Volatility and data releases are made for guys like that who want to put their stops at break even, and that's what a washout is to what you ever heard the term, Eileen, washing out the weak hands? That's exactly what that means. Okay, guys who are the weak hands, who don't want to hold the risk, who aren't willing to get that swing against them, they bring their stops in. That's what the market does. It goes just far enough so it triggers all those stops and washes out those weak hands, then it continues. So my opinion to you is this, know the data that's coming out before you get into that position and know whether you're willing to hold it through that or not. Okay. Um, I wouldn't mess with my stops because that's going to skew your risk to reward in the position. So your stop is where your stop is, and that was based on the risk to reward before you took the position. It shouldn't be changed based on the data. Um, and if you're really concerned about it, I would just simply close the position if you're in the money. But typically, I'm of the mindset of you've taken the position for a specific reason. Your risk to reward is sound. Let the market do what the market's going to do. Does that make sense, Eileen? I'm sorry to beat this topic to death, but um, it's important, I think. Eileen says, yes, yesterday this happened, but I took the trade off at 3 pips, and then the course of the data print went my way. Oh, well. And that's the thing, Eileen, you know what I mean? The data will typically, it's typically just a catalyst for the movement. And here's the thing, if the data went against you, your stop's in place. You know what I mean, Eileen? If the data goes against you, big whoop. Well, you took a 20 pip stop. Oh well, we can reposition. But if the data goes in your favor, well, now you had a much bigger position to work with. And typically, I don't have limits on the scalp. Typically, as soon as I jump into the trade, the stop is automatically on there, right? And I'll scale out of the position. So on an event risk where the market breaks in the direction of my favor, well, automatically already, I'm already riding the bigger portion of the move there. So, Eileen, I hope that helps. Mark says, I have the hardest time doing that. Andrew Smith says, good advice. Eileen says, okay, good discussion. I appreciate it. And more than welcome. Deepesh says, morning, Michael. A quick tutorial request, if you don't mind. 30-minute candles are used for identifying triggers. Can you walk through a couple of examples of what makes a good operable RSI support and resistance line, and what makes a clean or a clear trigger? Today's cable, for example, short entry for me, there were 2 triggers, but how do you use how but how do you I think you missed a word there, know which is the trigger. Secondly, how risky or worthwhile is seeking out triggers between the operable resistance highs and lows in your opinion? Wow, Deepesh, loaded question here, my man. Okay, you came to the right place. Let me tell you that. So let me tell you this, man. Listen, the 30-minute chart is not actually where we're doing most of the triggers. The 30-minute chart is where we're deriving our key levels, the scalp targets, the structure that we're trading within, okay? And this is where we're sort of ascertaining bias, okay? When we're actually looking to take a scalp by scalp basis, we're looking more so at the 5-minute chart, okay? Something like this. And this is where we're looking for the triggers, okay? Basically, when you're looking for a trigger, all you're looking for is basic trendline support, just as you would in price. So the more points that you have, the more validity or the stronger the trigger is. Just as in support, the more touches of support or resistance you have, the stronger the resistance or support becomes. The more validity or the stronger the breakout of that support or resistance becomes as well. The only thing that is very important to keep in mind, Deepesh, is that a trigger has no bearing whatsoever in and of itself. Okay, a trigger is just there to confirm what we're seeing in price. So if I see price breaking support, an opening range low, a major resistance level, a trend line, a longer term moving average, a pivot, a Fibonacci level, it's breaking something, okay? And then I see a resistance or support trigger giving out at the same time, that's what makes this operable, okay? Um, if I have, I can draw triggers all over the place. And the danger is they become so arbitrary that, you can start drawing triggers all over the place. This means nothing, right? This trigger right here, it's 2 points, right? But this is not an operable trigger because there was no break in price. You're right smack in the middle of a range here. It did nothing. So this is the difference between a non-operable trigger and an operable trigger. Does that make sense? So just a quick example there. Now on the 30-minute charts, we'll always have these as well because this is a little bit more of a wider range and this will give us more directional bias, okay? On the 5-minute chart, we're not looking for this to give us bias. This is looking just for the trigger. We already have a bias that's bearish or bullish. We're just looking for this to tell us when to actually click the bearish or bullish button. That's all. It's a big difference between the two. Okay. And again, on the 30 minutes where you look for those 40, 60 holes is where you look for a little bit more of the momentum profile. You'll hear me and Jamie call that, where it tells you a little bit more of the broader picture of what the momentum signature has been doing. All right. Depeche says, okay, got it. So to confirm the bias on the 30-minute chart on cable, at what point did you see the bias change and support fail? Okay. At what point did we see the bias change support fail? So a couple of things to note, and if you read the report, Depeche, there's a couple of things that you need to keep in mind, man. Remember, this is the bullish invalidation level. So as long as we're within this structure, you're still looking to actually buy pullbacks. Now, within the context of that structure, Depeche, we can still take short scalps, right? But you got to keep in mind that you're still within the bullish structure. It's the 5511 break here, the weekly open, the lower median line parallel. This is the break that would give us or signify a larger reversal in the pair. What would make me go bearish here, or what was looking bearish to me, was the fact that you were putting in divergence. Price action was pushing into a higher high, a higher high, a higher high. So it tells you the long side is vulnerable. And then the fact that on the way up here, we found resistance at 60. So this is the first time this week that on the rallies, the momentum signature is finding resistance at 60. So it finds resistance at 60, then it breaks through the lows. Well, that's a pretty good signal for a near-term short. Does that make sense, Depeche? Right? So on the rally up here, it found resistance at 60. Typically in really strong downtrends or in downtrends in general, resistance will find 60 in momentum. In strong uptrends, we'll find support at 40. Okay? So we found resistance at 60 on the 30-minute chart. Then you had that trigger on the 5 that broke. So already I'm starting to look lower. Then you broke a trendline support, opening range for Europe, and a trigger break. There's a lot there. Cool? He says, K, I got it. Thanks, my man. You got it, man. And guys, thanks for in the room for everyone for coping. But I hope that helps everyone get a little bit more clarity. I think it's you can't hear enough to kind of to drill it home. Hi, Mike. Would you take a trade on an opening range break without an RSI trigger? Sure would, Mark. Again, guys, it's not a necessity. It's a tool. Would I take a trade without an opening range break with an RSI trigger? Sure. Would I take a trade with an RSI trigger without an opening range break? Sure. Every trade is taken on its own merits, guys. Would I take a trade without opening range and without an RSI? Sure. If it's at resistance, it's got an awesome risk to reward. It's at a major multi-year resistance, and there's divergence. There's no necessary trigger, but every trade is taken on its own merits, guys. The more factors you can point to for the reasoning and the justification of it, the better and the harder you press that trade. Okay, maybe the higher the leverage you use. Maybe that trade is a little bit more aggressive for you. Okay, maybe you go on that one for a third of the daily ATR instead of a quarter. You know what I mean, guys? Um, uh, that's how you gauge, for me, how aggressive you actually put on the position, is how many of those factors I can line up. The opening range, RSI trigger, great. We just had a divergence, great. That's one more thing. Um, and the more things you can point to back up that statement, the better we can get in. Make sense? Eileen says, I like everyone else's questions. Helps me too. All right. Kelly says, hi, pal. Can you tell me where I can download the RSI2 indicator? Sorry to ask. Oh, by the way, great radio voice, pal. It pumps me up for a great trading day. Hey, Kelly, I appreciate that. I'm glad it helps you out. You can find the RSI2 trigger at fxcodebase.com. So that's the link for you, Kelly. I just sent it over there. You can find it in the question box. You're more than welcome. Actually, one of the attendees for the webinars back in the day that used to come to the Daily FX webinars made it. So it adds the 60/40 levels for you, so you don't have to add them manually, and it also auto scales the oscillator for you. So it's pretty cool. And thanks for the compliment. I guess having a radio voice ain't so bad, I guess. Oh, wow, Mark, thank you. Hey, Kelly, here's the link. Mark was nice enough to just link it right here. Here's the link, Kelly. You just click right on that and download it. Thanks again, man. Kelly says right on. Awesome. All right. I'm falling a little behind on your questions, so bear with me one sec, guys. Let me read some of these. Okay. Depeche, I got you. Kelly, I got you. Can you please show how to set the parameters for your RSI? Mine never looks quite the same. David, that's probably why. David, because you're probably using the normal RSI. This is RSI2, so go ahead and download that link I just sent over in the chat box. It's RSI2, and it basically just adds the 40-60 levels for you. That's probably why it doesn't look the same, David. But let me know if you're still having problems, man. Okay. So let's go through Aussie Yen. Who is that? Who's asking about Aussie Yen? Raj. Yeah, let's go through the rest of the intraday setups here. Great questions here today, guys. I hope this is. I hope you guys are finding this helpful. So here's the Aussie Yen. Another trade, which is been very interesting. Coming off a major area of resistance yesterday, made an outside reversal off of resistance at the weekly high. Okay, lots going on there. Now, doesn't necessarily mean it's a sell it and forget it type of trade. And in fact, today here we are covering the entire body of the candle. We haven't cleared anything that would invalidate the short bias just yet, but near term, you want to be on the lookout. So here's what it looks like on the scalp. So here's what we were looking at yesterday. And we've been following this one for a couple of days as well. If you note, this was highlighted also on Daily Effects earlier in the week. There was a upper median or a median line formation off of last week's low that we were following. And again, this thing came into a major daily resistance. We were looking for a little bit of a stretch higher and the pullback to stay constructive while within this formation. So yesterday's pullback came into the invalidation level. The invalidation level is actually 91.20. We lowered that to 91.17 after we saw validation of a high here. We strapped on a basic retracement. 38.2 came just alongside that median line, and it came in at 91.17, a couple of pips lower. Long story short, we broke below it, and then we tested this as resistance. So as long as we held below this region here at 91.80, you basically want to continue looking lower. The momentum signature had also turned around since the start of the week. So in the weekly open, you're holding 40 as support, you're breaking above 60, 40 is support, breaking above 70, 40 is support. On this move to the downside, you broke sub 30. So you would be basically looking lower below this region. You're looking to sell rallies below 91.80. So we came into this region, again, we dilly-dallied below. In overnight trade, what happened? You had some divergence, strong divergence, mind you, in that one of the reference points were below the extreme, the other reference point above the extreme, typically strong divergence signals when either one of the reference points are below or above the extreme, followed by a trigger break. Remember, when we're working with these trigger breaks, again, it's just like trendline analysis, guys, in that you want as many points of contact as possible, as many touch points as possible. So, yeah, this was an initial trigger I was looking at. It was a 2-point trigger. But guess what? When that broke, wasn't really what's the word? It wasn't operable in that there wasn't really a break of any range with that move, right? As that move was happening, we weren't breaking a resistance level per se. Yeah, we were breaking back above this this pivot, but timing wise wasn't really something that was from a standpoint of an opening range or something that was too compelling. Long story short, this wasn't necessarily from a high, but it had 4 points of contact now, and it was post a pretty strong divergence signal. So this was a much more compelling signal to work off of. Okay, and this was actually right at the European Open. Okay, and was accompanied by a break of the Asia Pac opening range high. So it was actually going to be the break of the Asia opening range high that shifted the focus to the upside. Wouldn't have even liked to play the long, to be quite frank with you, but I wouldn't have been surprised by it. I was looking for shorts off of this region all morning. Just hasn't panned out. There hasn't been any triggers necessarily to warrant that. So the game plan from here, I guess essentially, is see what the 5-minute is. Here's the 5-minute is. You know, this looked like a trigger here. It looked like it was going to break to the downside. This was before the U.S. Open, so I wasn't really going to jump into a trade right ahead of the U.S. Open. Now that we're putting in just the opening range, we're pressing into a fresh high. See if we can put in some divergence here. I don't necessarily have a new trigger to work with, and we're breaking through 91.80, which was the invalidation level. So now you're risking a rally back into the 92.30 region. So again, As far as the Aussie yen was concerned, that was sort of the major play I was looking for the open of US trade today, was to see if this was going to hold in a possible short entry off of this region. So we'll see how this pans out, but it doesn't look like it's going to give us something or any play on this right now. I would like to see if this divergence could still give us some divergence. Just going to be finding a trigger that's going to be tough here. We will see. Still interested in possibly trying to press the short side. Keep in mind, again, one of the reasoning of trying to maintain a short exposure here is this. Keep in mind, bring your attention to this chart, which was presented on Monday. Again, it is a weekly chart, but this trend line dating back to 2009, tagged again in 2012, tagged again this year. Okay, we broke below it, closed below it on a weekly basis, tested the yearly lows, and now we're testing it as resistance. As long as we hold below that, and that is the 92.32 area, I can't really get excited about, taking anything long. This is classic, break support, test as resistance, and if it holds, you look for the continuation. If we break back to the upside, you look for a recovery back initially into the, first initial target would be a soft 13-week moving average, but basically looking at this region back up here. So, even if you take it back into the daily chart, outside reversal day, as long as you hold below this region, it's kind of hard to get excited about doing anything on the long side. So Raj says, man, trading this month has been hard. Yes, you get these months every now and then. You take them in stride. Raj. Nothing I'd be too concerned about. And that's just when it's the test of a true trader, right? Is how they handle times like this in these really tough trading conditions. And maybe it's just a good time to take a stance back, lighten your trading load, the size of the trades that you're taking, lighten them. Maybe the frequency of the trades that you're taking, lighten them. For a guy like me who's typically very active, I could go a week or two without taking a position at all during these time periods. And even if I do trade, I'm much more nimble on the position sizes. So being flat is a position, guys. Keep that in play. Keep that in mind. There's nothing wrong with taking a sidestep. Capital preservation should always be paramount in everything that we do. So sometimes there's a need to want to be in the position for the sake of wanting to be in the position, right? Very risky way of trading. If the opportunity isn't there, the opportunity isn't there. But guess what? The market will always provide. So if it's not there today, it'll be there tomorrow, and it's our job to wait, be able to identify when that opportunity is there, and be able to capitalize when it's there, and know when it's not. More importantly, right? So that's Aussie yen. Last but not least, Aussie Kiwi. Wow. What a ripper, man. I know we've been talking about this regularly in the webinars, and we've been following it on the radar charts every day, but geez. So Aussie Key comes into a basic trend line support that dates back to the May lows. We talked about that. The initial sort of breakout zone that we were looking at since the start of the week was this area here. So again, the sliders that we were following. We talked about this like 6 times this week, so I'm not going to bore you guys again. I don't know how this got skewed, but let me replace that with the right slope. you're basically looking at that sliding parallel, came into the monthly pivot, the initial opening range low, or that sliding low, or that initial swing low there that we made early in the month. And that was basically this region to 1140, 1150, right? Major key resistance. And momentum is coming right into that 60 threshold. So that was the focus of resistance, and that was really the breakout zone. If that had broken, we already had our top side levels mapped out, the first of which was key resistance at the 2014 high day close. What's the 2014 high day close? 112.78. Okay? It blew through that. It literally blew through that. The second major key level that we were looking at, well, that was going to be the 2015 high day close. And that's exactly what we just tagged here today. The high was 113.49. The close was 113.49. Okay, and that was achieved on July 2nd when we made the stretch high here at 114.28. So here's what the intraday chart looks like for the Aussie Kiwi. It's been pretty much a one straight shot. If you didn't get entry, it was really hard to find a pullback for any type of decent stop. And ever since yesterday's report, when we even published that scalp, this thing's been an overbought, hasn't come back from overbought, and a really good lesson and a good example of something that we talk about quite often when we talk about these overbought conditions, and how people are saying, hey, when something's an overbought, you got to sell it, and that's when you should look to fade the move, and yada yada yada. Here's a trade that went overbought late last night at about what time did I write this? At about 10:30 last night. It's almost 9:15, almost 12 hours later, and the thing's still overbought. And here we are, a good 1240, a good 100 pips later. 12 hours and 100 pips later, and this thing is still at the highs, rallying higher, right? So as long as the overbought condition exists, guys, the propensity for the market to continue to rally is there. So long story short, 1250 was the initial soft target. By the way, these are all the levels that were mapped out last week. None of these levels are new. The only level that was added here that was new was actually the 1330, which was actually the 764 retracement of the decline, because we had no way of validating this was a low until we got this break here. But long story short, what I want to say. For the Aussie key, long story short, at this point, you want to really curb your appetite for the long side. Push higher from here. You're looking at 1368, which is just a nice pivot in price and a swing high that you made here early in the month. But at this point, you're again, coming up against former slope support. Not resistance. And it's interesting because if you look at this slope that we made for the lows here, it's the exact slope here. This is just a sliding parallel of the operative slope that we were working in for the last 2 months. All I did was copy that slope, and it was the exact lows that we made all through that ascent to start off the weekly open. So another really interesting trade. I do think the top side is pretty exhausted now. I wouldn't necessarily be looking to take on any new fresh long exposure on Aussie Key. But, the Kiwi just getting slammed. Every time you think there's some sort of support, well, let me take a step back. It's been following this thing ridiculous. Every time you think there's some sort of resistance that it's going to try to make a break, like it did for the last 3 or 4 days here as you were trying to test that median line as resistance, nothing, nada. And in fact, guys, good fake out procedure, bring it into a line chart, right? That's as close as you get without really breaking. So don't get faked out on this one. I'm just not really interested in trying to call low on this at any point. The first target, remember yesterday we were talking about, was the first area we'd maybe start to look for some sort of Support would be the S1, even though I'm not a real big pivot trader, but now you're in uncharted territory. You got to get creative and start to look at different factors since you don't have previous action per se, price action per se to look at. And even that, didn't really give you much of a support structure. We closed below it. We tagged it today's resistance, and here we are looking at slope support. Mark says, always look at the line chart, always look at the line chart, always look at the line chart. Reminder, LOL. Mark, I hope you didn't get caught on this one, man. You sound like you're trying to teach yourself something with that. Always, man. And that's something I taught myself the hard way, Mark. I hope you don't have to learn the hard way like I did, man. I always would look at a chart and I'd see something that looked like it broke a major key support or resistance, and bam, I'd start acting on it instantly. It took me years and years and years to finally just learn that simple trick. All right, let me just take a look. Wow. Those spikes and these wicks, and people will try to give you all different types of things that they're ascertaining and things that they're trying to deduce from these wicks and whatnot. Guys, long-term traders, portfolio managers, pros, a lot of times this is the only thing they're looking at. And so much is ascertained and so much is calculated on the close price of the New York close. So a lot of times when you're trying to determine whether a break is legit, whether a break has invalidated or validated a longer term trend line, support, resistance, the easiest thing to do is just take a quick look at the close, and it'll be something that should give you a lot more clarity inside. Mark, listen, shrug it off. Ain't nothing, man. Dust yourself off and you live to fight another day. We've all been there. Mike, looking to short euro dollar at 109.15. Swing update. Raj, are you asking me or are you telling me? I'm not necessarily trying to do anything with the euro right now. And again, for me, I'd have to see, some serious conviction of a decent trigger for the euro. I'm just not trying to get really involved with the euro right now. That's why it's on the radar charts. Remember, we were following the euro pretty nicely on the scalp. The trade for me earlier in the week was the break below 110.65, 110.55. Remember, we had this on the intraday all throughout last week and into the start of this week. The trade for me was from here into 109.85 and even into 109.50. Beyond here, for me, it's kind of tough. I think it's vulnerable. I really do think it's vulnerable. The short side's vulnerable, that is, as with this here, and if the broader rebound or the broader idea for some sort of push higher for the euro still does hold any type of merit, I'm just not really trying to get involved with the euro. Yeah, Raj. So that's one thing you got to keep in mind. Yeah, Jamie just posted it. That's going to be on the swing side of things, Jamie, for Raj, right? So for me on the intraday for the scalp, it's not something necessarily that I'm going to be looking at, right, guys? Keep it in mind. They're two separate strategies. So while the broader ideas that we have are always usually typically on the same exact page, he might be looking for a rally into something to sell. I might be looking to play that rally on the long side. It's the same picture, but we're looking to play different parts of it. So that is the Aussie Kiwi. So another crazy ripper. And again, I'll be following this one very closely. We'll see if that high day close for the year holds. If the correction has further to go to the downside, that is, this is the first resistance that you'd expect to give us a solid hold, is going to be that high day close. All right. Some other interesting charts, again, from yesterday's radar charts I just want to cover real quick is the Sterling CAD, Sterling Oz, which came into a major resistance confluence yesterday, a resistance sliding parallel, rather, multi-year. Here's off the ascent from last year's low. has been really nice guidance. You've seen some really nice pivots off of these median lines. The slider here off the high that you made back in July of last year, tagged again in February's peak here, almost to the pip with yesterday's rally, charging a nice reversal here. Also, within the confines of just this year's rally, basic channel resistance, also catching that high. Look for near-term support right around this region here, basically right into 210. Should be your first initial area of support. Major key support, still 207.20, this area right here. The other trade that was highlighted, the other major resistance that was highlighted on yesterday's radar charts was dollar CAD. Dollar CAD is also not the strongest pullback because, again, we haven't seen the dollar necessarily recede at all, but same type of play as far as it being a breakout at resistance. And there's that median line just off of the lows from May coming into focus. Tweeted this chart out last night. Again, near-term resistance. Look for support at the former swing highs for the year, 28.33. And again, you need to break below 27.70 to get the reversal. Jamie talked about a lot of different things on this with his webinar yesterday, guys, about how extreme we are in some of these CAD breakouts. Keep that in mind, and also keep in mind the fact that despite the ferocity, I want to call, of the breakout here, momentum still hasn't broken into overbought territory, right? Still tells you something. Tells you something. So keep that in mind. Also, there's a short-term trigger here I want to just keep in view. Kind of tip me off for what might be a near-term pullback here for dollar CAD as well. All right, and let's just take one last quick look here at the dollar index. That divergence grant us anything? All right, so it looks like that divergence is going into the trigger break here. And if we do break back below 12,008 as we head into the US Open in just about 4 minutes, guys, it might be the pullback that we were looking for. So keep that in mind. I don't have a scalp for Sterling Oz, by the way, Chintan. I was just highlighting that major resistance on the daily chart. I haven't really set up a scalp for that, but we'll take a look at it heading into next week. Wouldn't necessarily want to scalp it right against the first initial resistance bounce off of a major breakout like that, but we do want to be mindful of that first initial rally. Okay, guys, so we'll end it there. We'll pick things up again next week. Keep in mind the Monday public webinars on Daily FX at 8:30 Eastern, and then here again Tuesday, Wednesday, and Thursday at 8:30 Eastern right here on SB Trade Desk. Keep in mind, again, tomorrow morning, CPI data at 8:30 Eastern. We'll want to be mindful of that on all the dollar crosses. Look, hopefully it charges some volatility and we get some clarity on this dollar move. Other than that, stay nimble. We'll get some clarity on this heading into next week, and hopefully some more setups will be in view. Best of luck trading, guys. Have a great weekend. We'll see you next week. Cheers.